Hello everyone, this is Scott Bear here at Mortgage Pro, and this video is powered by your Realty Pro broker, and this is what is new this week. Now I have a number of things I need to cover. Hopefully I'll be able to get through them rather quickly, and wanted to make sure that you were aware that Greece's elections that I was mentioning last week, they came out with a good result. The New Democracy Party was able to take hold. Mr. Alexis Tsipras and the Syriza Party lost. Very good thing. So it sounds like the New Democracy Party was able to coalesce a government around a number of different factions, and so at least it's a step in the right direction. Now, mind you, that is one step of many, many, many more steps that Greece is still going to have to take to keep their financial house in order. I will keep you abreast. Second item on the menu. FHA collections and disputes. There was a rule that was going to be coming into effect this coming July 1st, and it was I think I mentioned this maybe a couple months ago. It was regarding aggregate collections on a borrower's credit profile, on their credit report. They were going to be, FHA was going to make you pay off every collection if the aggregate collections were $1,000 or over. And it didn't matter if they were normal collections or medical collections. That was going to be a huge hit on any FHA borrower who has, medical collections that, of course, had nothing to do with their ability to make payments or their financial wherewithal. Sometimes things just happen, and they were going to be basically discriminated against. So at least that will be rescinded. The entire thing is rescinded. FHA is not going to do that, and it's going to be business as usual. They were even going to make you show at least 3 months worth of payment history on all these various creditors that you had collections against. So you could have had 10 different collections, and you were going to have to show a payment history of 3 months for every one of these collections. It would have been a nightmare. So that's been rescinded. Very good thing. Third item on the menu. The Federal Open Market Committee just earlier this week met, and they kind of came to a consensus regarding quantitative easing 3, even though that wasn't specifically mentioned at all. They basically decided to extend what they call Operation Twist. I believe I might have mentioned this several months back, or I probably would have been more than that. But basically, Operation Twist was the Fed's mechanism to reinvest a lot of their investment dollars that they had made by investing in Treasury securities and the like. So they're going to extend that. It was supposed to end at the end of this month. They're going to extend that and tweak it just a little bit and buy a little bit more mortgage-backed securities in their reinvesting dollars. So all good stuff. It'll keep the rates, low, or at least help keep the rates low, amongst all the other material that is definitely helping keep the rates low. So have a fantastic weekend. Don't forget, you can't afford to use anybody but a professional in this industry during these times. So go with a pro, Realty Pro. We'll talk to you soon. Have a fantastic weekend. Bye-bye.